So not so long ago, if you remember, I did a video where I discussed the fact that major brokerages like Charles Schwab, TD Ameritrade, and E-Trade were cutting their trading commission fees to $0 following in the footsteps of Robinhood. And this was a major deal, a really big announcement, because it would kind of create the industry standard and also create a lot of competition. And if you haven't seen that video yet, you can check it out. Link will be in the description below, and you could view that video. I discussed the pros and cons and what I think will happen with this announcement. But now, to piggyback on top of that, there's a major announcement that just occurred. It was announced that Charles Schwab will be acquiring and purchasing TD Ameritrade. So in this video, what I want to do is discuss the pros and cons, how will this affect investors, and give my thoughts on this phenomena. So to start, this is not 100% definite and the deal might not close, but if it does happen and Charles Schwab does acquire TD Ameritrade Holdings, then this will be one less discount brokerage firm to choose from. This consolidation could have a major effect on average investors, and remember, this all began when TD Ameritrade and Charles Schwab announced that they'd be cutting their fees to zero on equities, ETFs, and options for their clients. This was announced on October 7th, and since then there's been a major, furious race to the bottom of who has the lowest fees for these prominent discount brokerages. So it's evident that this would combine two of the brokerage industry's most powerful companies, and together, Schwab and TD Ameritrade would oversee $5 trillion in client assets. A larger asset base would be most valuable to Schwab, who relies heavily on the deposits of cash from their clients and the interest that they earn from it. TD Ameritrade stock surged on the news, almost closing about 18% at the end of the week, and Schwab also closed up about 8%, and this means that investors feel that this would be a beneficial merger to investors. Now, just some quick stats about these companies so you get an idea of what we're talking about. It's no secret that these are massive companies, but Schwab is definitely a little bit bigger. Charles Schwab has a market cap of over $57 billion, while TD Ameritrade has a market cap of over $22 billion. Schwab has nearly $4 trillion in assets under management, and TD Ameritrade has over $1 trillion. Schwab has 19,500 employees, whereas TD Ameritrade has over 9,200 employees. And the share price of these two companies, Schwab closed at 44 3/4 this past Wednesday, and TD Ameritrade closed at 41.38. So far year to date, Schwab stock is up almost 8%, while TD Ameritrade stock is down over 15%. But at a time where trading fees are falling away, bigger might necessarily not be better. Any company, when you get to that size, is incentivized to push and move investors in the right direction that makes them the most profit, because they are a business after all. So investors can definitely expect some cross sales, meaning an upsell or a product that they're trying to market to their customers that they can make money on. And this is all coming on the heels of the fact that while recession fears are kind of dissipated, there's still some talk of whether or not a bear market is coming. And remember, by slashing those trading fees, Schwab reported that $90 million to $100 million of quarterly revenue came from those trading fees, which made up about 3 to 4% of their annual revenue. So if Schwab also absorbs TD Ameritrade's zeroed out commissions, they're going to have to make up for the difference in other ways. So how are they going to make up for that money? Well, strategists are saying that there's going to be an uptick in cross promotion of their robo products, like the Schwab Intelligent Portfolios product. But we've yet to see how these robo products can endure a bear market. You can't simply just rely on an algorithm to manage your portfolio. You need someone in real life to advise you. Another result of the merger could be Schwab trying to market to its self-directed investors their investment advisors who use Schwab as a custodian. These potential cross-sells fit a widespread trend where these brokerages are trying to be involved in the everyday life of an investor. Lower investing costs are definitely a great potential upside, but less choices are a downside. By doing this, you're taking out the independence of the market and giving clients less choice how to manage their money. A merger would also allow the combined company shed massive costs. This would happen because they'd be aligning back office operations and technology platforms. Analysts at Wells Fargo predict that Schwab could actually cut TD Ameritrade's costs by half, which would boost its profits in the process. Now remember, in October when they did slash its fees to zero, there was a steep sell-off in TD Ameritrade stock along with the other brokerage firms. This is because they relied more heavily on the trading commission fees than Schwab did to generate profit. So Schwab has an offering price of $25 billion. It can even go up to $26 billion. And this is still a premium price that they're willing to pay compared to where TD Ameritrade was before the deal broke, but still a lot less significant than $30 billion, the market cap that it was trading at in the beginning of the year. This also could raise the eyes of regulators who believe that they're trying to cripple the competition. They could view Schwab's move to cut fees as a way to cripple competitors who then try to acquire a company at a sizable discount. Schwab is already the largest custodian for registered investment advisors, or RIAs, and acquiring TD Ameritrade would mean adding another 7,000 investment firms to its platform. So even if the two companies do reach a final formal agreement, it's possible that regulators may not see eye to eye with that. On the the other hand, Wall Street would love to see a deal. Analysts believe that the stock could end up trading to the 50s or low 60s in the next 12 months. It's believed that consolidation has been a multi-decade trend that has worked well in the past. As I mentioned, the cost savings are immense, and of course the opportunity to cross-sell to the other platform's customers expand. A larger asset base will bring in more interest income, and this will actually potentially offset the fact that when the market downturn does occur, it might actually be able to survive it and thrive through it. It's also worth noting that Schwab isn't expected to scrap TD Ameritrade's Thinkorswim platform, which is considered to be one of the best platforms in the industry. And it was believed right from the get-go that Schwab was best positioned to win the broker wars. This is thanks to its diversification into wealth management and offering lower cost investments like ETFs. So it'll be really interesting to see if this deal comes together and goes through, and Schwab will probably end up acquiring other small companies, and it will be really interesting to see, with this amount of power that this massive company would have, what they can do and what they could take over. Schwab, if they aren't already, could end up being like the Amazon of the brokerage industry. I want to hear your thoughts. Tell me down below, do you think that this is right to do? Do you think they're just trying to create a massive monopoly that would eat up all the other competitors? Or do you think they have the power to do it and that's just the way it works? If you enjoyed that video, be sure to give it a big thumbs up, smash that like button so that way more people can see videos just like this. And if you haven't already, be sure to subscribe to my channel. I post videos every single week on finance, mindset, entrepreneurship, business, you name it, I cover it on this channel. And if you'd like to be notified every time I upload a new video so that way you're first in line to see it, be sure to hit that notification bell as well so that way you're notified every time I make a new video. See you in the next one.